Hey everybody, it's Swaminathan. I wanted to discuss the spider. If you saw my email this morning, markets are a little bit down, but the spider straddle has not been doing well. I think we put this about 10 days ago, if I'm not mistaken. And 10 days is about the time you can give a long straddle because we have double time decay. You can see here we have $181 in time decay, and that's obviously showing here. So even though the spiders moved from 171 down to about 169, it's being overshadowed by the time decay. So generally, when it comes to 10 days for the straddle, I think you need to do something. So right now you can see the 171 put has a profit of about $950, 970 now. I've got a 20 contract position, so if we're on a per contract basis, that's about 50 bucks, and it just crossed 1,000, so that's about 50 bucks per contract. Okay, so now this is important on how you can adjust a straddle. This is well, how you can adjust a straddle if it's not working out. This is a good way to do it. Let's see here. We've got almost 400 negative deltas. All right, so this is important here. We've got 400 negative deltas. If we look at the analyze screen, this is not the spider. Okay, so if we look at the analyze screen, what we can see here is the spider is right now over here. Now, granted, if it goes down further, we'll start showing a profit, but it's just not able to do that. And let's just take a quick look at the markets again and seeing, okay, so the markets seem to be going down. So maybe this might not be the right time to do it. It's going down. The puts are going to be increasing in value. Let's just take a look at the puts. Yep, the puts are increasing in value. So I'm going to pause this video and I'll come back because the adjustment rationale still holds. And what we'll do is when the market seems to be stabilized, I'll come back and continue the video. Okay, seems to have stabilized a little bit. We still have a profit of about 1050. So on a per contract basis, that's about 50 bucks. And so let's go take a look at the analyze graph because I want to explain this adjustment. This is always a good adjustment when a long straddle is not making the move that you want. And when it reaches about 10 days, you really have to do something about it. All right, so the stock is right here. On the put side, you can see that we can break even if the market goes down to 167, but it's not able to do that. But the point is the white line is now sagging into this area here, and that's the problem. And if the market starts to go up, we're actually going to go down because even further because it's going to come into the center area of this white line, which is even lower than where it is over here. And you can see the break even on the call side is now very high. So what we want to do is this tactic is also called gamma scalping because basically what you're doing is you're taking advantage of this very high gamma to do it. Now the point is this has a negative 400 delta. And so what we want to do is make an adjustment that sort of brings it delta neutral. And then once you bring it delta neutral, then which means that the straddle can go either way, calls or puts, and it'll make money. Right now, we have a negative 400 delta. So if the spider turns around and starts going up, we are going to lose at the rate of $400 for every 1 point move that the spider makes. So rather than do that, we want to cash in some of our profits on the puts. So if we did this, and you want to make it, you want to just sell enough puts so that you make this almost delta neutral, somewhat delta neutral, things like that. So right now you can see we have a profit of about $1,200 on the spiders. So each one is about $60 each contract. So if we come back to our analyze screen and we take a look at this, if we sell 6 contracts, I'm going to check this now. And now you can see we are a negative 61. In fact, we can probably sell 7 and we are delta neutral. So from this point onwards, so now see what happened to the graph. I don't know if you noticed it, but let's take a look again. Okay, this is our original position and we have a negative 426 delta. By closing 7 out of these 20 puts, we are going to pocket profit. Okay, on each one we are pocketing about $60. So 7 contracts, we are pocketing $420 profit. And by doing that, now we flatten this line out and it actually becomes delta neutral. So from this point onwards, even if the stock turns around, it's okay. Because of the high gamma, now we'll start developing positive deltas instead of negative deltas. However, if it continues to go down, then we continue to develop negative deltas. So you can see the minus 5% is minus, if we go down 5%, then we have so many negative deltas. If we go up 5%, we have so many positive deltas. So that's all coming from the gamma effect, and that's why this strategy is called gamma scalping, because you're literally scalping gamma out of this, out of this straddle. And so that's when you have a lot of time. This is in the October, so we have 65 days. When you have a lot of time, you can do gamma scalping like this. So by closing this, we are actually going to book a profit. Of course, the position has a loss, but we're going to book a profit of $420. In fact, I don't know, I think it might be more now. Let's see. 1290, 13, so 65 bucks. Yeah, 1300. So 65 bucks per contract, and that would be about $450. So we're going to be pocketing $450 in profit, and then we'll be making the position delta neutral. So that's what I want to do with the spider, because we do have to take some action here. So we want to sell 7 contracts. Let's go for the mid price at 496, and okay, that gets filled. And so let me take this off. Now you can see, we are delta neutral. You can see the delta is just 1.34. So either, if the stock goes either way, it's fine. Now you can see the call side, we pulled in the break even right here. And what we gave up was on the put side, we pushed out the break even, because now you can't look at break evens. What you need to do is come out of this strategy, in a positive manner. Now, granted, now your P&L will show negative, 1100, but that's not the point. The point is you have to keep track of what you have booked also, which is $450. So that's exactly what we're going to do on the spider. We already did this. I'm going to send this email out. Thanks. Bye-bye.